Good afternoon, everyone. This is Doron Yoets over at Alpha 7 Trading Academy, here to do a recap on today's trades. February 6th, Monday, we were able to take 3 trades and finish under 2 hours. My first impression on the market was that it was going to be very, very tough. The market started off very slow pace and actually continued to consolidate and contract throughout the day. As you could see, you need to look at the bigger picture when you want to see consolidation, because the 1 minute or the 5 minute won't really provide you that opportunity. So when looking at the 15 and the 60, you can see that not much moves were made until around after lunchtime or right before lunchtime is about to end around 12:45 Eastern Standard Time. However, even with a minor pull down, it pulled right back up after it touched the Bollinger Bands, and making it once again difficult to find things to correlate with SPY to help support your trade, right? Because the way we trade is I like to use multiple factors that will increase my probability of the trade working out. So if SPY is moving in my direction, what do you think is going to happen? That's right, it's going to go up, right? So we took 3 trades today. Our first trade was WMB, so let's go over that. I took the trade at 9:54, so I'm going to push back here to 9:54 so we could actually go back and see what I saw and why I took it and what was the end result, right? So you could see here that my first trade for the day didn't happen until close to a half hour after the market opened. I just couldn't find anything for the open. And guys, it's very important, very imperative that you stick to your guns, you stick to conviction, because if you feel the compellingness of wanting to trade at the open because people make so much money at the open, that's not a relevant reason to trade for the open, okay? You need to have some substance when trading, always, okay? Always have substance. So, anyways, back to WMB, you could see that I had a 1 minute setup, 5 minute setup, 15 minute setup, and 60 or daily didn't really have anything for me going. Unless it would to work out, then I would have a possible move later on. But as you could see, the next red candle pushed below the 5 MA, thus alleviating us or invalidating the trade. But our entry, okay, was above this high, 29.55. And you can see at 29.55, and I'll put this box down here. So 29.56 was my entry, okay? And I was looking for the long haul. Today, I told all my members that this week I'm going for the long haul on all the trades, looking to see what happens, trying to stretch out the maximum of the possible situations that could happen on a positive end and a negative end, right? It's always good to test out your possible limitations and what's the worst case scenario and best case scenario, and then create those variables as levels that you shouldn't really be deviating from, as long as the levels are supportive to your plan, right? If they're not good enough, you need to reevaluate and then do that. So with WMB, we got in, and 56, it went all the way to 69. I had a 14-cent gain with 1,000 shares, which is $140. Now, for the sake of my members learning, I keep my risk per trade to around $100 and $150 per trade. So this one was a $100 risk, which means that I had a 10-cent stop. I like my stops to be very narrow compared to wide. I know many people tell me differently. They say, oh, I'd rather have wide stops and, you know, get and have less probability of being stopped out. But I believe and have faith in my setups and my trades, and if it doesn't work out the way I perceive it, then I won't get in it, and then I won't be mad if it stopped me out to begin with. And furthermore, on top of that, what you want to make sure is that the reason I do narrow stops is so that I could take heavier shares, right? Especially on stocks that are $29, $50, $100. You want to be able to try to get the least amount of risk with the most amount of bang for your buck. So I was up 1.4 R times my risk, which I could have taken a partial and maybe alleviate my loss and break even or make a little bit of a profit. But at the end, I stopped out with the 5 MA trailing, as you can see here, and my stop was actually $29.53, giving me a 3-cent loss for a $30 loss, which is a 0.3 R loss, right, for the multiples. So next trade was AA, and you could see that I got in because it had a multiple breakout here, and although it did work, some of my members did partial out because it hit a potential target area of the upper BB on the 5-minute, as you could see here. So moving along, next. So CVS was a 3-lane perfect storm, and what a 3-lane perfect storm means to me and my members in Alpha 7 is 3 multiple time frames having setups simultaneously breaking out. So let me give you an example of how this worked out. So at 10:22, we had a setup here. All right, let me just push this up. This isn't the right 1 minute. This is the right 1 minute, as you can see the difference. So we had a setup here, breaking out here, and we had a 5-minute setup at a 10 o'clock candle, 5-minute with the high at 76.15. So you could tell right away, and all my members know right away, that the trade is at 76.16, which means these guys had a ton of time to be able to enter in, put in their entry, their buy stop, and then also put in their targets and their stop. Okay, so everyone always has enough time to be able to get in, and I even provide the stops, the entries, and the targets. So no one's left alone, and transparency is at its fullest. Okay, so 15-minute, same thing. Look at this, 15-minute. What is the high of the 15-minute? If you look down here, I'll put it right here, 76.15. So not only was the high of the 15-minute setup 76.15, but so was the 5-minute, okay? And then so was the 1 minute. So I had 3 different time frames, the 1, 5, and 15, giving me tons of amounts of probability that this wants to go in my direction with limited amount of risk, because my risk was the stop of the 5 MA, and later on it became the stop of the 15 5 MA as it continued to work out, right? Makes sense. So once we triggered, I did not get out until it hit my first targets, which was 76.61s. Okay, with 76.61s, I was able to take everything out and be able to make a beautiful, beautiful profit of $412, 4.12 R in terms of risk, of how much I was risking initially. Okay, so compared to the $45 loss I had to the next trade, 412, my risk management is amazing, right? Because if I I'm willing to risk only $100, but my possibility of making $400 is always great, then my risk management is flawless. I wouldn't say flawless. I don't like to be arrogant, but it's great, right? There's always room for improvement. Lastly, I had, and speaking of which, there wasn't only one partial on 76.91. There were other partials with that. I was able to take 76.40s, 76.50s, going all the way to 76.61, which eventually gave me my $412 profit. And you could see that potential targets were here and here, okay? So AA happened at 11:32, and the reason I took this trade is because I only took 2 trades, and my rules is that I'm able to take a maximum of 3 losing trades for the day. If I feel that I'm doing good and I have a feel for the market, I'll continue to move on to see if I could continue to build on my profits. However, I didn't really like this market, as I stated at first when I started chatting with you guys, is that the market has been very, very contracted, and really there's not that much moves or the ability or opportunity for big wide price moves. So I decided to cut my risk in half, and this is great, guys. You guys have to do this. If you do this, you will increase your consistency bar none. So what you need to do is you always want to look before you want to take another trade after you made a decent amount of profits for the day, is how much do I really want to lock in for the day? So I was up around $389 before AA, okay? Then what happened was I decided that I wanted to stick to $300 at least. I wanted to lock in $300, 3 times my risk for the day. So I decided to cut my risk in half and only risk $50 in 500 shares. And we could see here that I got in at 11:32. Just getting it set up here for you guys. And it was based on the 5 and 15 where it had setups, but it was unable to continue to follow through. It was a really, really tight setup where the 5-minute 5 MA was really close to my entry, which makes my stop narrow. And you could see that my entry on top of that candle is 37.74, so 37.75 was my entry. It went all the way to 37.78, not much. Couldn't push up higher, pushed down, and stopped me out at 37.66 for a 9-cent loss and a $45 loss. So you can see that my losses are less than 1 times my risk. They're less than the $100 that I initially wanted to trade. Why? Because I have trailing stops as well. They move up as time progresses, right? Because there's a saying that as time goes by, so does your valuation of the trade, right? It starts to deteriorate. So with that being said, I was able to close up with a $337 profit in less than 2 hours with only $100 risk per trade. How cool is that? Hope you guys stay tuned for the next ones. Whenever I have time, I'll be able to do this. Just most of the time, I don't finish in just 2 hours. I do like to take my time with my members and teach them in the chat room. So anyways, I hope you enjoyed. I hope you learned something. If you just learned one thing, then it was worth your time. And then it was worth my time of creating the video. So hope you like and stay tuned. Have a great day.